We've got traders out there saying that despite some measure of political uncertainty lingering in the background, the market will move higher, underpinned by a flood of liquidity, seeing that T-bill rates are now sitting under 3%. What's your perspective on the markets and the direction it's set to take?
These are interesting times for our market because, as you've said it, most of the companies that are listed have very strong fundamentals. They've actually recouped in terms of growth, in terms of strategy, in terms of gaining ground. And given the support that most of them have received through government policy and initiatives, the market is actually looking ahead at good times. You can even see the index has actually been on an upward trend, and many people, especially foreign investors, are changing their positions, and we're having local investors looking at the best portfolios to actually have. However, there's a dark cloud hanging over in terms of political aspects and how the people are going to perceive the draft. And what we know is for sure that the draft will actually affect how business is conducted in Kenya, whichever way it goes, whether it's accepted by Kenyans or whether it's rejected by them.
Well, certainly encouraging are some of the growth forecasts we've seen emerge. We've had Finance Minister Uhuru Kenyatta saying that the economy will probably expand 4.5% this year from the 2.6% growth that was clocked in 2009. Now, we know that banks are highly correlated to GDP. And with that, I mean, Kenya's Equity Bank expects profit to increase by more than a half this year. I mean, benefiting from faster growth in East Africa's largest economy, and then benefiting from its investments in Uganda and Sudan as well. What's your view on Equity Bank and its prospects moving forward?
I believe Equity Bank is a trailblazer as far as the financial institutions are concerned. We've been able to see that it's been able to come up with very innovative and modern products and services for its customers. And we're looking at its customers, it's targeting the people at the bottom of the pyramid, looking at the people who have little money to spend but are willing to spend it nonetheless. With its strategic partnerships with companies like Safaricom, the World Bank, and other local IT innovation companies, we're able to see that definitely Equity has been able to take advantage of the mass market with its products, and with the East African community actually becoming effective this Thursday. It's a company that's looking at harnessing the entire mass market in the 5 countries. They have the capability to handle the numbers. They have got the capital deposits to actually be able to give out more. And from its strategy, looking at it, it's focusing actually on loaning out more money to SMEs, because they believe that SMEs are the platform for wealth creation, especially for the unemployed workforce.
Steve, how do you see them funding this growth? Do they have enough in their coffers right now?
I believe Equity has the right amount of money, and even if they don't have, I believe it has strategic partners that will be able to give it the necessary resources for it to actually go ahead. And also, given the fact that with every product that they come up with, it's a definite revenue generation machine. And for example, its partnership with Safaricom for the M-Cash or the Future account, this is one thing that's actually going to make it a lot of money that will actually be able to see it expand across the region.
While Equity might have enough in its war chest, I mean, falling rates and a planned drop in public borrowing are likely, we've been hearing reports, to herald a flurry of corporate bond issues as well. What's your outlook in that front, in a context where we are seeing valuations on the equity side of things improve?
I believe what this quarter and the next coming quarter is going to see a lot of activities in the bond market. We're going to see a lot of companies trying to raise capital from the stock market, but all this is going to be dependent upon the political aspect and how things are going to be, because at the end of the day, many investors are watching to see how the political tide will actually go. And when you're looking at different companies, for example, Equity or Kenya Commercial Bank or Cooperative Bank, these are companies that are actually putting their eye set on the East African region, and they're trying to come up with the prudent financial instruments to be able to raise the necessary capital to go ahead. And what I know is, for example, Equity has enough money in its watches, because apart from just looking at the East African region, we're looking at it having its eyes set on acquiring Housing Finance Corporation of Kenya, the leading mortgage institution in the country. And I believe with key strategic partnerships, some of these companies might not need to borrow money from the market or from syndicated loans, because but sometimes partnerships are what you need to be able to achieve your objectives and vision across your markets.